Emperor, we're back. I made a little double top there. Didn't make a new high. Relentless though. Just close out of that. Oh, holy. Did you hear that? Oh my gosh. That almost hit me. It says this Thinkorswim build is from 1978. I gotta show you guys this. Oh shoot, I can't screenshot that. That's hilarious. This platform, the desktop Thinkorswim, it says build 1978. That's about what it looks like. First like nice sweet loot. Amazon earnings and Snap. I mean, I don't know. With Meta, I don't, maybe be bullish, but maybe that's already priced in. Almost 5% on Amazon. I can't close Thinkorswim. That's cool. Do this. Oh. Turn that off for a sec. And then turn it back on. Force quit that? Cool. Well. Well, I guess I'm waiting for PCE data. Market might just stay flat till tomorrow. Flat-ish. Took some puts. There you go. Yeah, that's a good way to do it. Honestly, with earnings, it's like seems like such a roll of the dice. Selling premium almost makes more sense. I would imagine earnings would be bad, but we had bad earnings maybe last quarter on these tech companies, so they were pricing in a really bad, another bad earnings. So it's really just compared to expectations, right? It's always that. So potentially, the analysts have low expectations, so then you get those beats. Grab miss. Welcome back, welcome back, welcome back. Dude, there's consolidation up here? Really? This candle's gonna be insane. Have the employees cutting, will that be reflected in this in Q4 though? And wouldn't that necessarily be bullish? Less overhead? I mean, I see lack of demand to need them, which is bearish, but maybe they're ahead of it. Hills is breaking VWAP. My accidental trades are almost always the best. I was half expecting nat gas to just dump when I accidentally shorted it. Yeah, that's true. I guess it'd be a wash. Potentially, unless they're ahead of it. And it's not because of lack of demand or revenue, they just are running a little leaner in anticipation for that. Alright, a little double top there, but really just consolidating. Could have picked any time of the day and just gone long. It would have been an easy hold. Whee! Massive cover call on Amazon. I could lose power or internet again. It's pretty squally out here. Hills is going above VWAP now. Two minutes, 1.5 minutes. What's after hours? We have earnings on Amazon, Snap. Maybe stick around for a little bit. I'm not going to do a video today. Not enough time. Donation, better internet service. It's good. There's just a squall coming through. I like my internet. No data caps. Amazing. Little inverse beta there on BBY. All right. SPY just barely coming down into close. Wow. What a bullish day, man. BBY is green. Green day on Bed Bath. Red candle. Ding. That was the bell. Amazon earnings, they're gonna buy Bed Bath & Beyond. Wait for it. Emotionally handle it. They're gonna buy it for $10 a share. It's going up. Did it release already? By age 30, 42% of millennials own their homes. Whoa, that's way old. Just getting little pre-earnings jumps. I don't think it's released yet. Actually, we could get the crew back on, see what they do. Amazon's ripping. Looks like that earnings is out. What's wrong with GME? Why you? Oh yeah, ripping the SPY. 6%. 8%. Wow, that move on SPY. I guess I was kind of playing earnings just with the futures. Woo.
Frankly, in this environment, cannot reach profitability.
Not talking about earnings yet.
And I think that's exactly what we're seeing.
Understood. Okay, thanks, gentlemen. We got to jump. Appreciate it, Randy Frederick, Cooper Howard. Good setup here for tomorrow and an explanation of what's been happening so far. Big rally today. NASDAQ ends at the highs. Coming up, it's earnings time. We've got Amazon trying to carry the torch, Intel trying to save itself, and T-Mobile with a lot of integration happening with multiple acquisitions.
Huge spike on GME. They're going to break right now. Come on, man. You got to come back. We got a game tomorrow. We got a game to win. Yeah, I think the earnings were possibly a beat. EPS 0.31. Whoa, that was a big beat. Verse 22 were expectations. Oh my gosh, the market's in a massive short squeeze. I'm tempted to close these contracts. Holy smokes. That's a huge beat. Yeah, I think it's analysts. Last earnings, they all got slapped around and missed to the downside, or maybe not last, but last couple, somewhere in there. And we're coming around. It's whipsawing back the other way. They were low expectations, and now we're beating on the upside. Dude, look at this. Oh boy. Yeah, EPS was 31 cents. Estimates were 22 cents. Revenue was 127 billion versus 124 billion estimates. So beat on rev, killed it on EPS. What percentage is that? That's like a 30% beat. Woo. Dude, that candle on Amazon? 10.5. Snap release yet? Just getting excited. Dude, that candle on SPY made up to 413.57. Ooh.
They beat both on the top and bottom line, and they also provided guidance that was better than the street's expectations. We kind of talked about it this morning here. When you're looking
almost
at
12% on Amazon.
The AWS segment grew by 16% year over year.
There
the
it
street
is.
was looking for growth of about 14.2%.
Crazy.
So they beat on the AWS number. International
I don't know
segment
what to
also
do.
increased about 1% year over year. We talked about
I
that.
mean, we
also
might have another big day tomorrow, like today.
We saw a drop of about 8% in the last
That would be
quarter. That
very
was
bad
also
for
another area
shorts.
where they could have seen some growth. So yes, not surprising we are seeing these type of numbers being rolled out at this point in time. The stock's reacting to that at this point, and then we'll hear what the commentary is. But at this, I mean, the market's really trying to, get into a lot of these tech names, especially
LB
these large
also?
cap tech names. And even when you're looking at the free cash flow number, I just had it here. It's at $3 billion, if I'm not mistaken. Yeah, it was $3 billion loss for operating.
Market's not liking the beat as much. I mean, Amazon beat by a lot.
$3.3 billion.
That's
So
huge. That's a huge beat.
tighten that gap here. They're on the trajectory of having potentially a flat or maybe even
Intel doesn't look like it's out
positive
yet.
cash
It's
flow
hardly
in the next
moved.
6 months. Overall, this is a good report.
Okay. We know there's cuts as part of this. Market has no problem.
Stock's really
with that
illiquid. You might
because
not
the
be.
Details emerge on where and how many.
Oh, never mind. Yeah, that's legit.
So, Caroline, are they breaking out the S&P 5000
It was
house over
up
there?
200% today.
You know
Dude, this is on my watch list.
not quite
Why
sure
didn't I see it?
Most people leave the minute the bell rings, so we'll have to actually wait and see. But
What?
obviously, Amazon's such a big player. You know, I was a bit worried because Google, Microsoft,
Up's
Meta
up
really
200%
set the
today.
bar kind of high. So now all four of these are setting the bar high for Apple next week. But big tech,
Dude,
definitely.
what is
I
going
mean,
on?
obviously the bar was lowered. So if the bar is lowered and you jump over it, it seems like the market's rewarding for it. And I'm taking a look at Amazon shares, and they're up 16%
What?
right now. One
This
thing
have
I
earnings
haven't
also?
seen yet is e-commerce. I know that we were expecting a deceleration in e-commerce growth. I'm still looking for that number, but yeah, about
Oh, this is
13%
Chinese? I
growth
never
in
realized that.
AWS. That compares to Microsoft's 27% growth, so I mean it is relative, but growth nonetheless.
Oh my
that was in
gosh.
line with expectations, but yes, easy.
This is
beat
top
on both
ships,
top
right?
and
In the
bottom
same one?
line, and
This one had a crazy
reason
short
to
squeeze, or is this
celebrate
different?
tomorrow, or hey, today, based on this
Oh,
chart
this is a
right
different
here.
one.
Yeah. Trading at 122 right now, so a little bit lower, about 11%. But hey, double
Those are
digits,
top
double
ships.
digits. Amazon
That's crazy.
Web Services,
I can't even-
$21.4 billion. Street was looking for
I don't know how to
about
follow this.
21. To me, that looks almost exactly like the situation we had for Microsoft, which was Azure in line
Wow,
with what
Amazon
the expectations
holding
were.
the 12% highs.
Do you think that is calming investors here, Kevin, that they've got their head around the extent to which the cloud sector has cooled?
Yes, definitely, and that's going to also probably trickle into some of these other names that
Intel's
are
only up
associated with
2.5.
Amazon or the cloud, like Snowflake, things of that nature. So now
Snap
we have to
hasn't
look
come
at
out
their
yet.
earnings, and if they are seeing a little bit of a rebound, then yes, that could
This one
provide
is a Chinese
lot of
IPO from
momentum here
recently,
to the upside
from
for
recent.
the bulls, and maybe we are seeing
not
a
too recent, like a
situation
year
where
ago.
this rolling recession or this
All right, if we
economic
lose power
slowdown
again,
is
I'm
taking
not
a
gonna go
little
back
bit
on.
longer than what the
I don't
market
think Snap
expected.
came
I
out.
think the ingredients are still there. You kind of talked about that with Randy Frederick as well as Bob Iacchino. I think the ingredients are still there, but the market's really looking for a story, and so they're going to go into names that are showing I wouldn't say growth,
you
but
could see
they're
this thing coming though. Look at the
showing a little
momentum.
bit more of a better outlook
I wasn't
than what
looking
the
at
street
it.
was expecting.
Got
So
green over the
this could
9,
have some
bullish
downstream
MACD.
effects. This could also have an impact here, Oliver, on some of the
Who knew he was gonna make that move, but
considered
still
consumer
looking good.
staples now. Walmart,
Volume was
Target,
increasing.
things of that nature. Yes, we might see the e-commerce side slow here a little bit, but at the end of the day, it's associated with a
China
company that's
stocks, man.
also beating both on the top and bottom line and providing better guidance. So yes, I think this might be this is probably the best
11.3.
reflection of a diversified company out of all of them that we've
That's a
actually
huge
seen
amount.
as far as the larger cap and
1.13
mega
trillion
cap
market
names.
cap.
Okay. What do you think, Carolina? Amazon here, the
I felt like you freaks.
clear highlight.
You
We got
filthy
Intel, we got
animals.
T-Mobile out too. A little bit of different story there for T-Mobile, but if you got a last thought on Amazon, go ahead. If you got another one on your mind, take
Oh,
us
looks like
there.
Snap maybe came out.
Well, you know, I've already switched over to Intel.
Okay,
and this
Intel.
was one that, you know, we were expecting its largest ever quarterly loss, and actually Intel, surprising to the upside.
See, there you
still a
go.
loss,
They're
but
expecting the
much
largest
better than
ever
expected,
quarterly loss. So the
reporting,
expectations were
adjusted
all
loss of
very
4
low, it
cents per
seems.
share. The expectation was for a loss of around 15 or 16 cents per share.
Adjusted
So a beat
revenue
on
at
the bottom
11
line.
billion
Also a
versus
beat on the
estimates was
top line.
11
Analysts were
billion. So it's
expecting
11.72 versus estimates was
$11 billion. That
11.11.
would
So
represent about 40%
pretty close to estimates on
decline
revenue.
from the year ago period. Instead, they came in at 11.7
Whoa,
billion.
loss per
So,
share is
a
way
beat
better
there
than
as well.
estimated.
In terms of guidance, sees Q2 revenue at 11.5 to 12.5 billion dollars. So
She might
could
say
be
it.
a bit lower than Q1 or higher on an adjusted loss of 4 cents per share. So basically in line with this quarter. Looking for its data center figures. The expectation was for $3.5 billion for its data center. We know
So they
chip
estimate a
demand has
loss
been
of 16
falling.
cents
We
per
know,
share,
obviously,
and only had a 4-cent loss per share.
PC sales. Now Microsoft showed some signs
There
of
you
life
have right there, adjusted
We'll have
EPS.
to see if that's
That's
what's giving
huge.
a boost
That's a huge
to
beat.
the top and bottom line here too. Maybe they're seeing some signs of life as well. But I think the big question is,
Yeah, all the analysts, I
what
think, just
inventory levels look like? Is
pricing
there
way low.
going to be some bottoming out in terms of
And this is going to happen
chip
next
demands
quarter. So
or
next quarter you
chips-
could maybe
I'm
get
sorry,
puts. Whoa,
inventories,
Snap is flushing.
meaning more
You know,
increased
because now they're
demand
going to
too,
put these
and
high
some of these PC
expectations, and
sales. We know
might not happen
Intel
as
has
quick as
been
next
another
quarter, but
company
maybe the
that's
quarter
been
after.
really in cost-cutting mode, while at the same time investing
Snap is
and
dumping
trying to make chip
15%.
factories here in the U.S.
Pins earnings
so
came
spending
out.
money's trying to save money.
Rev was 602 million,
Definitely
estimates
a lot to look for on the
592.
earnings call, but just taking
Just
a look
EPS,
in terms of
8
Intel
cents.
shares right now, I'm seeing
Wow,
a
versus
pop
estimated was
on these results.
0.3.
So it could be a good day for Intel tomorrow as
What?
well. And we'll see if any
Pins
more
killed it.
analysts get bullish on this name. I mean, this is
Killed
one that hasn't,
expectations.
you know, you think of Intel, the biggest
Hey,
competitor,
that's
I
what that
would
looks
say,
like
or
to
one of
me.
the biggest, AMD,
Why
which
is
is
it
up
down?
35%.
This has to do with Snap,
year-to-date.
maybe.
Intel's only up about 13%. And you take a look at the analyst breakdown, only 5 have buy ratings, 29 are in the hold camp. So let's see if we get any crossover into the bullish camp on these results tomorrow.
Certainly
Apple's
one-sided
higher market
there.
cap.
Here's the thing: is that not to throw
straddle,
coal on all the
that should work, right?
enthusiasm, but we saw there's still negative numbers on Amazon's free cash flow, and then for Intel, they lost money on the bottom line. Still, and it's like still
But not as much money.
not as
it's
much
all about
money.
perspective, Oliver.
For sure, especially
you lower
when,
the bar enough,
yeah.
and you jump over it, and
Yeah.
this market has been rewarding it.
And when all the analysts are, skewed one way, I could see that. But like fundamentally, still here, are we like looking past the elephant in the room here, Kevin? I mean, these are meaningfully
Dude.
worse numbers than we've seen from these companies at their peak in the last 3 years.
Holy hands get me way too hyped.
Yeah.
I hope not.
my
Tired of the
stance
bearish
on this
news.
whole
However,
market,
someone else
however.
would
So,
be lovely to
let's
come
just
out with a
say, at
filing
the
on
end
a
of the day,
stalking horse
this
bid
is actually kind of a mixed report, and I got a little bit at the end
for
of that
not like
question
10
here,
cents, but like
when
$10
you're looking
a
at
share.
the adjusted earnings per share estimate moving
be
forward,
ridiculous.
obviously
Maybe
they
$1.
are projecting a loss, and actually the street was looking for a gain of about 1 cent
Maybe 50 cents.
for the
I mean,
estimate. So it's kind of mixed. The revenue guidance was actually better than the street expected, and they continue to call out the slowing in demand when it comes to the PC side of the business. PC inventory is still getting worked through, so I don't think
Pins
we've
looks
actually
bullish
seen
to me.
that
I
being
mean,
corrected
it's just
at
a
this
headline,
point
I
in
guess. I
time.
don't
But once again, I mean, you're in an environment that has a fairly low VIX. You're looking for opportunities.
Killed it on
The market's looking
EPS.
for opportunities.
I don't know what the
and feel-good
expectations were
stories, and they're
for
rewarding it. And so, yes, I think there's still some issues
loss per share.
fundamentally
Wait, what?
across the board when we are, moving to the upside by 2.5% in the marketplace, and each of these companies, for the most part, are saying volumes are stagnant or they're contracting. I mean, that means the consumer is not really
coming down a
spending;
little
it's
bit.
slowing down, and the price impact of that has actually been good from a top line standpoint. But at the end of the day, it's not going to be able to last. So I think we are rewarding a little bit, giving a lot more premium to some of this mediocrity when it comes to earnings than we probably should. But at the end of the day, the market's going to try to price out the market as what it sees as fair value, and right now it seems like it feels like this company here deserves a pop, and it feels like the broader market deserves a pop as well.
Mediocrities everywhere. Kevin Green quote there. That's an Amadeus quote, but I feel like that's Kevin Green's quote. Hey, T-Mobile, though, what happened here? I thought they were far
Filing
from
for
mediocre.
a
Maybe they're
bidder
just bitten off
on
more than they can
BBBY.
chew for the moment after a big rally the last year and a half.
Rip up
Caroline,
to
they got
50 cents just to gap
Mint, they bought from Ryan Reynolds. They got
Well, 85,000
Sprint,
contracts
of
at
course.
50
It's been a
cents.
big bull case. I mean, they're still crushing AT&T and Verizon on the charts.
Well, keep in mind, Mint Mobile, that deal is under regulatory scrutiny right now, DOJ considering that. So could maybe not happen. We'll have to wait and see. Let's see if they give any updates on the earnings call. But similar to AT&T and Verizon, this was a beat on the bottom line, but a miss on the top line. EPS of $1.58 came in 7 cents higher than expectations, but revenue came in at $19.63 billion. The expectation was for $19.76 billion. So that's, of course, a decline from the year-ago period, but also falling short of analyst expectations. I will say it did boost its subscriber forecast for the year, raised its low end of its full-year guidance, core adjusted EBITDA guidance from $28.7 billion to $29.2 billion. To 28.8 to 29.2, so raising that a bit.
Yeah, that's pretty good.
So raising guidance, but a miss on the top line. So just taking a look at shares right now, as we kind of, they're not really doing all that much. So I think that this is going to, I think postpaid net additions, that's going to be important. Seeing 287,000 in Q1, so definitely far off Q4 numbers, which was expected. I don't think that analysts were expecting it to be quite as impressive, but let's see how the street digests those, because it's quite a bit lower than Q4, that's for sure.
Okay. Yeah.
Snap Q1 revenue, 988 million. Estimates were a billion.
And
So just missed on rev.
The bottom line beat.
EPS was 1 cent. Estimates were
and the postpaid additions. So I mean, it seems like they're
a loss of
still
1 cent. Estimates were a loss of 5 cents.
Not a super high volume trading session in the afternoon.
Beat on
Maybe we'll
EPS
revisit tomorrow, and also maybe stock here that needs some time because it does kind of move slowly, but has been moving slowly upward. Appreciate it, guys. Thank you very much. Caroline Woods, Kevin Green. Good stuff, team. Amazon continues the optimism with a big rally in the aftermarket. We got two more names to get into, though. George Tillis has his eyes on Snap and First Solar.
Hype. Snap didn't like that at all. SPY came back down a little bit. Amazon's settling down. Yeah, golf clap. Oh, Intel's coming down actually. Interesting. HKD moving with top. Yep, there you go, 3.5%. Snapped. Megal, yeah, we're getting the Chinese IPOs running. Megal's another one. This one used to move with HKD, I think, right? Timber, pharmaceuticals. Datadog, they have earnings? Lunar? Must have. Oh, nothing? Are they up?
But they still can't make money, George. Is that right? Am I reading that right?
It's still right, OJ. I'm not surprised to see it down the way it is. I mean, just to know, they actually aren't providing Q2 guidance. So this is what the second time, at least in the last 3 quarters, they've done this. I think that's part of why we are seeing the decline. But it looks like also, I mean, earnings per share.
No guidance.
I talked about this with Alex and Jenny. Anytime you're near break even, they are expecting a 1-cent loss. They actually came in with a 1-cent adjusted profit. That's a good thing.
Yeah, I thought
but you know, considering again the adjusted loss last quarter for the same quarter last year, 2 cents, that's a significant improvement in percentage terms. But the levels again are still something to be concerned about. But if you look at the sales, it looks like for my estimates here, 989 million was the number, 1.01 billion was the expectation. So that looks like it's down about 7 or 8% on a year-over-year basis. The daily active user number was up about 15% year over year to 383 million. That did miss the estimates just fractionally. I think it was around 384 million. Rounded
Intel
up,
reports
but,
largest
last
quarterly
quarter,
loss in company
daily
history.
active user growth was around 17%. So, you know, I haven't looked at the average revenue per user numbers because last quarter I think that was one of the culprits associated with the challenges that Snapchat still faces. But they do have their subscription services, which is their Snapchat Plus, which is their ad-free based business. That has certainly been growing, but you know, I think still, OJ, the company's doesn't have direction, if you ask me, and I think that's one of the reasons why. If you look at the last 3 quarters or almost 4 quarters now, the stock has been stuck in a trading range, and now, based upon this this price action, the after was around $8 or so. Looks like it's going to be at the low, if not breaking below the lower end of that 4-quarter trading range.
Hey, George, where does this story end for Snap? I mean, if they're not making money after all this time, what's the end game here? I mean, do they need to pair up with some other service? They're going to have to make major layoffs. Can they get ChatGPT to run the business? Just set it on AI, you know, go.
Dude, that thing's sold off.
Well, I think. Well, if I got you correctly, as you're breaking up there, I mean,
Expense
expense reduction certainly helped. I think that's one of the reasons
GPT
why last quarter they reported 14 cents and beat the estimates and adjusted profits.
Yeah, MTD's moving a little
going
bit.
forward, it looks like the estimates, which may change, you know, for the worse here, for fiscal year 23 was around 24 cents. So just think about the quarter. I mean, they were expected to lose a penny, but essentially, by the end of the year, for the full year, around 24 cents profitability. Going out to 2024, 43 cents. Now, these are the estimates by analysts. So they see something, maybe a pretty pronounced turnaround, some sort of a partnership. I can't say exactly what it is, but I mean, I don't think expense reduction perhaps is enough at this point in time. I think right now, just because the platform itself really hasn't proven itself to advertisers, there's still some cautious elements of spending on their platform. I think that's one of the reasons why they're
net earnings
really
are out.
flirting with
Revenue
that
is
break-even
290 million.
adjusted basis.
Estimates 290.
But if you look at the
EPS,
GAAP losses,
8 cents. Estimates for 3.5.
I mean, it basically has a negative
Down
30+%
though.
earnings yield because they did report a loss of 329 million.
Is this guidance also?
989 million
Killed it on EPS.
in sales. So that implies a negative earnings yield. That does imply also that the stock price should continue to drift lower based upon them losing money. So if things don't turn around, in some exceptional way, either new technologies, new services, which are going to be expensive, things are going to still be under pressure from a stock price standpoint.
Okay. All right, George, not great for Snap, not terribly new though either, as this has kind of been their hang up for some time, and why the stock is over the last half a year now down 20%, and Meta's up 43%. Huge difference here.
Yep.
Okay, how about for solar, George? I think this is an important one, because it's up a huge amount using that same time frame I just gave, about 80% the last 7 months or so. And obviously all the excitement around the Inflation Reduction Act and what it means for green energy companies, but kind of sliding and stuck around the same level, about $200 throughout the last 2 months.
Yeah.
And they missed
so
pretty
if you
big
look at the
top
price
line.
action, I'll talk about the price action first, OJ. If you look at every single quarter since the Inflation Reduction Act, they've actually been gapping higher. The stock up 170% over the last 52 weeks. I mean, it's made a tremendous run. So looking at the quarter, here's the kicker. I mean, you would think based upon the miss, the stock would be down significantly. It's not. But the company did report 40 cents versus a 97-cent estimate. So they missed the estimate. But still, that's a significant improvement considering they lost 41 cents for the same quarter last year. And that, again, is implied profits based upon the fiscal stimulus that this company and, of course, the industry group has participated in. The other thing is sales at $548 million did miss the estimates quite a bit. $723 million was the estimate. So that's still 49% higher year over year. Now, again, going forward, it looks like they are going to continue to revise their full year expectations. In other words, they see normalized earnings and revenues for the full year. They're just looking at this as a one-off quarter, and of course, sales and earnings based upon the misses. But if you just look at the tremendous turnaround, and if you consider last year the company lost $1.40 per share, and every single quarter the company has inched its earnings per share profile higher.
Thanks, guys, for hanging out. Thanks for the support. Case, thank you for the dono. John Parker, thank you for the donation, buddy. That $5 went a long way. I think I bought like 2,000 shares of it.
The stock that really represents a price profile.
T-Mobile came out their earnings.
From losses to profitability.
$1.58. Estimates were $1.48.
Again, a lot of times you see these one-off quarters. OJ, you don't see the reaction.
Revenue is about what expected.
In the after hours. Perhaps again,
thanks guys for your subs, your thumbs,
these strong trends do end at some
notification
point
bells.
in time.
Follow us on Twitter at
HappyMoneyYT. I use a 10-period moving
sub up, like
average
it,
for stop
down.
losses. So
Happy
I don't know
money
what that is based upon the after hours price action and the intraday trading, but just something to keep in mind because
John.
again, I don't
Thanks,
necessarily like the look of
Appreciate it, guys.
so large, but they reiterated their guidance for the full year.
What's happening after hours. We'll see you on Discord.
There's a little pop here, so not totally negative response. I mean, this will tell us there's a lot of optimism in this sector if it's able to shrug off a big top-line miss like that, it seems like.
Yeah, I agree with you there, OJ. I mean, this trend can still continue. You have to go with the trend as long as it's still higher. And like I said,